Hey guys, happy Friday and welcome to a quick video which I nearly didn't make because it's a bit personal, it's a little bit, do people want to know this information or whatever, but in the end I just thought, what the hell, let me just make the video because since Q4 2023 earnings I've just seen so much confusion on Twitter. People that are bulls in Lemonade have been saying, why do I own the company? Or just asking questions about like guide and earnings and do these things add up and does management do this? And even a few people saying, should we have new management in the company? To which I said no. So I wanted to share my perspective, and I have to really emphasize that I do not give financial advice, and none of this is financial advice. It's just me sharing my story, and it's sharing a bit of bigger picture perspective as to, like, if you own a company like Lemonade, how do you deal with the volatility in the stock price, in the earnings, in the story, all the stuff that kind of comes and goes over time? Like, how do you deal with that? And I think the answer is you really need to understand why you own the company. And I'm going to explain, I'm going to try to tell you why I own it and why I want to own it for decades to come. So to do that, I need to explain a bit of my story, and it's a bit cringe, but whatever. If you don't like it, don't watch the video. So I was born in like the late 80s and grew up in East London, and so my family lived there, and it was a very poor place at that time. So there was a lot of deprivation, and my parents moved there because my dad wanted to work in a particular kind of faith-based ministry. His job was he was in the Christian church, and so he wanted to do that. So he moved to this really deprived place and didn't make a lot of income for doing that. And my mum was busy raising the kids, so she didn't work, so our family income was very low. So there were times, and I cringe to tell you this, but there were times in my upbringing when the family didn't have food and just things were tough. So from a very young age, I said, the hell with that. I'm not being poor in my life, and that was just how it was for me. So very early on, I started a business, and I had no resources. So what I did is I went around the streets and I collected aluminium cans, and they were just everywhere, and you could sell them for about 2 pennies each to a scrapyard, so about 4 cents at the time in the US, 4 US cents. And so I collected those, I collected other scrap metal, and then I would sell that to a scrapyard. So that was good, and that got me cash flow. And then what I did with that cash flow is I started Business One, and I'll come back to that. But the reason is I read a load of investing books when I was like really young. I think Rich Dad Poor Dad was one of those by Robert Kiyosaki, One Up on Wall Street by Peter Lynch. I've read a lot of stuff that Buffett wrote and Charlie Munger, all those guys, and they all talked about, especially Warren Buffett, talked about collecting businesses over your lifetime. So Warren Buffett said, over your lifetime, if you just collected 10 or 20 good businesses and just held on to those for your life, you'd end up pretty wealthy. And the reason is that you get cash flow coming in, right? So I was taking the cash flow, this is way back when I was like 12 years old, 14 years old, taking the cash flow from collecting cans and scrap metal, and then I reinvested that into building Business One, and I still own this business today. Anytime I want to, I can go out into the market and I can trade using this business. So that is something that I will own for the rest of my life. It's a great business, I love it, it's really fun. If you want to see more on this, by the way, go and check out my other YouTube channel called Shady Josh. There's not much overlap with Lemonade, but I think it's fun, so check it out. So I built this business, and this took me like a long time to build to a really great business. But now I have a van, I have property, i.e. like premises where I can trade from. I've got knowledge, so anytime I want, I can have this free cash flow, and I can turn this on and off. Over here, you can see I've got a job. That's part of my story now too. So mostly this takes up my time, and I don't have a lot of time for this. But anytime, if I wanted to switch off this, I could come back to this as a main thing in my life. So that's pretty good. Then what happened? Over the next sort of period of time, I took all the business, all the capital from here, all the cash flow, and I built Business Two. So Business Two is rental houses. And again, I'm not trying to brag about what I've done in my life. I'm trying to give the overall perspective as to Lemonade is being one of these businesses that I'm collecting over my life cycle. So the rental houses don't need much explanation, you know what they are, so you get steady cash flow. Long term you get a good inflation hedge because rents and capital values go up with inflation in the long run, and you get monthly cash flow. And I think you can see a bit of a trend emerging. Free cash flow from this bike trading is very profitable, very quick, regular cash flow if you know what you're doing, and monthly cash flow from rental houses. So these two big checks. And so what happens over time, so I reinvested all my capital from this trading into building up this business, Rental 2, and now both of these, whenever I want, this one all the time and this one when I feel like it, they give me cash flow. And I've got my job as well, so you can see I've got sort of 3 sources of income, so that's great. But over the last sort of probably 10 years, I didn't have a lot of money to invest actually in the stock market until about 3 years ago, because I was building this side. All of my kind of my income from my job was going into building these two, and they have become pretty substantial in my life. So over the last, like, let's say 5 years, I've been like thinking, where is that business that I can just build a big position in to become business number 3? And I looked long and hard. It should have been Tesla, but I just didn't have the capital. Up till like mid 2020 or 21 or something, all my money was going into these two, so I just didn't have a lot of capital to put into the stock market. But now these two have they're doing, especially this one, let's say, because I do pay tax, this one is doing really well, and this one is optional, let's say that. So now these two are sorted, I want a business over on this side, and this is going to be a bit more passive. So let's come to Lemonade. Why is Lemonade a great choice for me personally? Well, firstly, I work in the insurance industry, so that's good. I understand the market, I understand the products, and it's just a great business. Insurance is one of those businesses that when it works well, when you have good distribution, you run a business well, it just pays a lot of dividends. So check out Chubb Insurance, check out the big like titans of the industry. They just pay quarterly dividends. Like if you look at Chubb's dividend history, every single year Chubb pays a higher dividend than the one before. And I think for 30 years now, the quarterly dividend has gone up every year. So it's one of the S&P 500 dividend aristocrats. And I think Lemonade could be there one day too. So Lemonade, let's say in 2035, this is what I'm looking for. A set of very stable core products, so pet, renters, home, etc., and then they will finance expansion into other markets and other products, let's say. But think about now, I've got these two, and I've got my job. I'm just throwing all of my spare cash flow now into Lemonade, because at some point, let's say I could get to 25,000 shares, and let's just make up some numbers. I'm not going to explain where they come from, but let's just say at some point in the future, Lemonade makes $2 earnings per share. And now let's say that they have a 30% payout ratio, so 30% of earnings are paid out as dividends. Well, let's say I had 25,000 shares, they make $2 per share and 30% payout ratio, so about 60 cents per share dividend. Well, my 25,000 shares would be $15,000 per year, and maybe I'd get a quarterly dividend. So it's just a nice business to own, and it fits with these two. I understand these two really well. I love these two, and they're great. And I love Lemonade as well. It's a company that I really understand well. I think I've worked in the industry long enough to really have a good insight as to why it can be a great business, I believe. And again, not financial advice. I'm just talking about my own story and why I'm invested. And then over time, I'm going to try and build out business number 4. This hasn't really gone anywhere so far, but I think it could one day. If you want to check out my main YouTube channel, which is called Shady Josh, again, if YouTube was to work out as a good business, then that would pay me monthly cash flow. And then business 5 is Tesla. So I do have still quite a significant holding here, which is my wife actually holds it. And I think, you guys know Tesla. I think in the long run they will solve full self-driving, and the next gen car I think will be a massive platform for growth. I think robo-taxis will happen one day, we don't know when, but I think someday. and I think the Tesla bot will be huge. And I think logically it makes sense that at some point in the future Tesla will be a huge, big tech company, and I think they will pay monthly or quarterly dividends. So again, this is cash flow. So this is my plan, this is what I'm doing. So when all this comes through, obviously no guarantees, Lemonade could not work out, Tesla could not work out, but these two, they have worked out. These two are done. And now I'm working on this side of the board. And then at some point, if I really feel like it, and all this stuff comes together, I can just cancel that. And so that's my plan. Does it make sense for everybody else? No, of course not. This is just me. But I think Lemonade is just one of those businesses that, when you really boil it down, it's simple, but there's other bits behind the facade that are quite complex, and I think I understand those well too. So Lemonade in the long run, I think, will be a massive contributor to my personal GDP. If I can grow my position to, let's say, 25,000 shares, and we get dividends every quarter on those shares, that's just a big block of a business that I'm not going to sell. So like, we could get to 2050 and I still own that slice of Lemonade, and then maybe by that time some of this stuff will drop off a bit and I'll expand into other new businesses or build a better rental income or something. It doesn't matter. In the near term, in the next 5 to 10 years, this is what I'm building out. And just to touch again on being long term, this business took me literally 10 years to build. From when I was like age, probably 10 to 12 I started it. I started in scrap metal at age 10, and then by age like 14 this was really working well, and I had a full-time partner working with me. He was like up and down the country every week buying these bikes. I was back home selling them and fixing them and doing stuff. This was like back when I was a teenager. This made me, I'm not going to say how much obviously, but this made my life financially, and then all the money went into this, and now all the money from, let's say, this one is going over to business 3, which is Lemonade, and obviously my job as well is putting some money into that. So that's it. Like, this took me 10 years, this took me, there's some overlap, but this took me 10 years as well, and I think Lemonade will take me 10 years. From when I started following the company, which was probably mid-21, and I didn't invest anything until the share price had gone down to 70. I was in and out a bit, and then I just pulled out. And then the last, let's say, 6 months, I've really kind of got back on board with this thought of just getting a big block of shares in the company. And I think it'll be another probably 5 years before that is where it needs to be, and probably 10 years before it starts to pay me a dividend. But that's fine, I'm not in a rush. And my challenge to you guys, and you know who you are, my challenge to you, if you are in Lemonade and talking about the guide not being good for 2024, and management not giving a clear story on the earnings deck, all of that stuff is, yeah, I get it. There were some things on the earnings deck that didn't make sense, like where the guys talked about cats being up and down in different quarters. It just wasn't a clear slide, and I think I couldn't understand that one. The guide, yeah, it's a bit puzzling, but does it matter? Like, for me, no, it does not matter. I have 2 things that I'm bearing in mind. One, will Lemonade go bankrupt? And I think the Q4 earnings deck really helped me to have confidence that they won't go bankrupt. And number 2, will the company have big operational leverage in the future? And then will the financials come out to ultimately have a decent quarterly dividend? That's really what I'm looking for, is growth and the financials coming through. So in that context, I don't care about Q4 at all, actually. All I care about is the long term. If I own this thing for 20 years, in 20 years time, will I get what I'm looking for? I can't own Palantir in a massive way, even though my wife has a bit of shares. I can't own Nvidia. I can't own Microsoft and Facebook and all these other companies, because I just don't know enough about tech or all those other businesses to have a massive position. What I do understand is insurance and Tesla. I understand Tesla. So for me, I don't want to have a massive range of companies. So takeaway from this is, ask yourself, what kind of investor are you? What are you looking for? If Lemonade fits into your worldview, as it does fit into my worldview, then maybe it's a good company for you. And if it's not a great fit, if the management don't quite line up with your way of seeing things, you know what, there's no shame in just saying, it's not for me. I will move on and I will buy something else that I really love and understand. So I'll leave it there. That's been a bit of my story. Again, sorry to be rambling and probably oversharing a bit, but I thought perspective is good. So thanks for watching. Happy Friday, and I wish you all good luck in 2024. See you soon. Bye.